independently of the size of the country, because of course people think about the individual sizes of countries at local markets, but when you're an ambitious entrepreneur, you're not looking at the local, only at the local market. You can look at the local market to test your product and to start, but then you can move to other larger markets and build a very large company. So I think we're already seeing this happening in the region in Central America. So I met today, entrepreneurs from Costa Rica, from El Salvador, from Guatemala, and from other countries, and I'm really impressed by the entrepreneurial energy and the companies that are being formed. So I'm really convinced that there will be great companies that will come out of the region, and will.
Have you invested in any in Central America?
Not yet.
Okay, let's make this the start of your next, 10 startups. One should be Central America. Let's hope for that.
Great. Let's do it. But by the way, I should have started, saying that thank you very much for the invitation to be here. I mean, it's really, really a pleasure. Thanks for all the Caricaco team, and it's really impressive, and it's great to see, what you're building here.
Thanks a lot. Shu, what about you?
Lo siento, voy a hablar en inglés. Estoy aprendiendo español, pero solo para la vida diaria de Miami. un poquito diferente que el español de negocios. Although español de venture es inglés. Term sheet, TAM, big win, todo en inglés. Pero lo siento. I should always try to speak the language of where I am, so I'm learning. Next year I'll be doing this instead. Israel is a very interesting country to think about. It's in the middle of nowhere. It's really like a patch of desert, and it's one of the most thriving entrepreneurial ecosystems in the world. Not because it's a big market, because it has entrepreneurs who test things in Israel and then they go somewhere else to scale their companies. And I think markets like Costa Rica, even Argentina, I mean the Argentinian market is not great. Chile, any small country that doesn't have a big local market has the potential to do in Israel. And Argentina has done that. Chile has done that. So we do growth investing, so Series B and beyond. And for us, any company we invest in has to be able to be at least a couple $1 billion company when we exit. It has to, otherwise our fund doesn't make sense. The only way you do that is you build in a big market, ideally Brazil or Mexico, but you don't have to be from there. And that's what some Argentine founders, Chilean founders have figured out, especially Chile recently. They perfect the business in Chile, in Santiago. No one's paying attention, not as many risks. They get the product market fit right, and when they're ready, they go to Mexico. By the way, not only do they go to Mexico organically, they buy Mexican companies and expand there because they know what they're doing. It's a unique advantage that small markets with a lot of talent have. So my challenge would be, we need more Central American founders building in LATAM, and you have the advantage that you can test things here tranquilo, everyone leaves you alone. You don't burn too much capital. If you start in Mexico with a seed, everyone expects you to be a giant company, and if you miss it, you missed it. Here you're left alone, you can refine it, and then when you know exactly what you're doing, you show up in Mexico City and you destroy everybody.
So Shu, you already answered my next question. That was, do you prefer a Central American startup to consolidate and grow in Central America, or go to a bigger market? Because of how you have your fund and how big you need it, I know your answer, but is that it? Or
I have a very strong point of view here, but it's not just mine. I have to think about the capital markets and the public markets, which is the ultimate market, right? The ultimate capital market, trillions of dollars. And those investors don't value every market equally. It's a weird thing to hear, but just because you have revenue of 100, if 90 is from country 1 and 10 is from country 2, you won't get the same multiple for those two. Because those investors are thinking about how long you can keep growing. So Chile revenue is worth less than Brazil revenue. 10 from Chile, 10 from Brazil, you get a higher multiple for Brazil revenue. So what I always tell founders is, once you've perfected your company, don't mess around taking more small steps. Then take the big step. Start with the small step, refine things, and I don't know Eric's point of view, frankly, on this, But don't then say, okay, now we're gonna go to El Salvador, and then Honduras, and then maybe one day we'll go to Peru, and then maybe we'll go to Colombia next. That's a waste of the bullets that you have. Once you've figured things out, go to Mexico immediately, or go to Brazil and try. You never know. David Velez from Colombia is the most successful founder from Latin America. He's not from Brazil. So that would be my challenge, is once you take the small step, take the big step. Don't keep taking the small steps. Do you agree?
I agree, but the only point I would make is that it depends a little bit on the type of business, because there's another angle when we see, for example, Rappi. We invested in the seed round of Rappi there in 2016. And some other, let's say, tech-enabled businesses that have to deal with, like, delivery networks or anything that's more, local. For those businesses, it's important to think about cities more than countries. So in that sense, I think you can go. I mean, Lima can be a great market, or Buenos Aires or Santiago, and it's less about countries. But if you're talking more, the more you talk about a pure tech company, I'm totally aligned. I mean, you should go for the big markets. I mean, and make that big step.
Great, and you both invest.
By the way, this is insanely beautiful right now. I just want to take a moment.
Nice.
What a great
to
idea.
appreciate.
You guys have a great view. We're not saying that, but
This moment is insane.
Yeah.
Look at it.
cool.
It's so beautiful.
So, well, these guys see the great view, and we're talking. I hope they're
We're
putting a
in
little
the
bit of
way.
attention. But
In the way.
so you two invest in different stages, and early stage, usually what everyone says is everything is the founder, the team. It doesn't matter really if it's a great idea or product market fit or whatever. Yeah, it's important, but so you agree with that? And Shu, what happens at your stage?
I totally agree with that. I think if we move back in time, and we were having this conversation 15 years ago, we used to say, so what do you look at an investment? When you're looking for an investment, what do you really analyze? And we used to say back then, and we were still learning, we're always learning, but we used to say, no, we have to look at the team and the market and the business model. Like if they were like three, same importance for the three aspects. And we used to say that. And then we learned the hard way, how the team is important, because we ended up saying no to a few companies where we loved the team, but we disagreed that the business model was not that great, and they should change the business model. And then what happened? We didn't invest. They went there, they pivoted, they changed the business model and became $1 billion company. And we said no because of that. And we also observed that great founders, they choose great markets. So every time, if you really try to outsmart entrepreneurs, especially in the beginning, don't do it. So we have to be in early stage specialists in entrepreneurs. Of course, we have to know a good amount about tech and about building companies. We have to know all these things, and we have to be good at it. But what we really have to be good at is to understanding the profile of the best founders, the motivations. And there's a pattern recognition. With time, you start to recognize that. But you should always keep also your open mind to be surprised, because sometimes you find a great founder that doesn't follow kind of all the what you're expecting.
Yeah. So I grew up in Kenya. This reminds me a lot of Nairobi, by the way. I feel very at home. My dad is an entrepreneur, but he started a hardware store. And when you talk about people of that generation about being a founder of a company, they say, okay, great. So you buy something, you sell it, you make some money. You say, no. Product market fit and unit economics, what are you talking about? We're in a very weird new invention type of business called a startup. And a startup is not a business. It becomes a business. The traditional way of doing new companies was it's a business day one. A startup is not a business day one. This first phase of a startup, which Eric was just articulating so well, is a discovery journey to see if there's a business in a given market. That's what it is. That's what pre-seed, seed, sometimes A is. And then when you get to A and you start to get to B, then you're finding the business, and that's when we invest. So we're in the blend of discovery and real business. And companies are on different ends of the spectrum when they get to the B, between those two things. But we like for there to be more business than discovery when we invest. And Eric likes there to be more discovery than business when he invests. So for us, the founder matters, but suddenly you have a lot more information to use. And the mistake founders make often at the growth stage is they still tell this story about the market and their story and why, and it's much less relevant.
You don't give a fuck.
By that point, you have either discovered the business or you haven't, right? It's much more clear. It's a much easier job than Eric's job or Alan's job.
And I'm gonna go to that point. How do you really recognize an A team from a B team? What's the process that you guys make? There's some funds that really write really small checks, and then in 2-3 months they see if the team is really what it appeared to be, or how do you do it?
We'd all love to know.
Yeah, that's the
Is there something that we
question.
can learn, or is it
We're still learning. We're still learning, and of course getting it right sometimes, and making mistakes. And I think it's not an exact science. Of course, it's far from being an exact science. I think it's important to say, just to complement that, you have to differentiate Series A's from seed rounds. So we are more of a Series A investor, but we also invest in seed rounds to position ourselves for great Series A's. We usually cherry pick seed rounds with proven or experienced entrepreneurs. So that's important to say.
Okay.
But in either case, it's about the entrepreneur. In the Series A, and why Series A is the sweet spot of venture capital, because you have enough information about the famous product market fit to eliminate the product risk, which is the highest risk, the highest mortality, is product market fit risk. So, but it's still early that you have a lot of upside. So that's why Series A is where everybody wants to go and wants to be. Seed is much more difficult. Seed, it's basically only the team. But getting to your question, in my opinion, each of us, if you ask the different partners at monashees, you'll get different answers for that. We don't have a common framework.
Yeah.
We have, each of us has their own framework. Mine, how I like to see it, is really, I think, the background, the experience, the skills, all these more hard skills, or these are actually this is a kind of a given. You want a team that's great on all these metrics. But the real question that we dig in the conversations with entrepreneurs is, why are you building this company? What's driving you? And I know they may sound like a cliche, but that's for me is the big question. Why you're doing this? And of course today, especially in the last 5-7 years, all entrepreneurs come with a great story of the why. They were trained, or they say, we have to create a story and everything. But you have to spend time. That's why it's so important to spend time. You cannot make a decision I have 2 term sheets, I need a term sheet by tomorrow. It doesn't work. You have to spend time and get to know. This is a long-term partnership. And the why is important because, in my opinion, to be an entrepreneur to decide to be an entrepreneur is not a rational decision. If you are rational about it, you're not an
you don't do it.
because the risk is too high. There are other things that are much safer. So, in my opinion, it's a passionate decision, and it's about passion. And in my opinion, there are 2 passions that we need to see in the entrepreneur. One is, it's has to be there. The other is more optional. And when they have the 2, it's the best combination. The one that has to be there is passion for impact. Not impact in the sense of impact funds or things like that, but impact in terms of building something really big. The passion for really, kind of solving a big problem, a relevant problem, and creating a great institution, a great company to last. So it's the passion for impact has to be there, and we have to see that. And the other that is optional, but it's great when it's there, is the passion for the problem they're solving. It's sometimes the passion for impact is enough, but the passion for the problem, the identification with the problem they're solving. Not necessarily being an insider and having worked 10 years with that. It's just the passion for solving that problem. When combined for the passion for impact, these are the big drivers, and in my opinion, have to be there on top of the other things.
And I agree with Eric. I just add one thing that I've noticed over time, and I try to learn from the greats in Silicon Valley who created this type of business that we're in. And at different points, Don Valentine from Sequoia and Peter Thiel from Founders Fund, very different people have said the same thing effectively, which is founders should think small, not big. It sounds weird. What do I mean? Founders who talk about market size generally aren't the best founders. Founders who talk about specific thing they're doing generally are the better founders. And Peter Thiel always said, I like small markets because I want people who are solving a very niche problem. Don Valentine said, I like when a founder can write exactly what they're doing on the back of a business card. We don't have those anymore, but when they existed, it was a card roughly that size. And if you can write on it what your business is, that's a better idea than the one where you can't write because you need a whole page. And the way I internalize that is some founders are really specific about what they're doing and some are very vague about what they're doing, and you want to be specific.
That's a great point, and that's a very important question. We always, to Shu's point, we always ask, so tell us in one sentence, what are you doing? What do you want to do? And you would be surprised.
90% can.
99% can. And we start just like the one sentence becomes like a
that's
3-minute.
an elevator pitch, right?
Yes.
Not even.
Not even, no, it's much
even
shorter.
less than that.
Much shorter.
So, I want to go back. You were managing partner of SoftBank. So there's a lot of buzz around it. First, I want to hear from Eric
About SoftBank?
about SoftBank. What do you guys think about what SoftBank did in Latin America? Was it good? Was it bad? And then I want to understand from your point, you being there, what do you do good? What do you do bad? And what would you change?
I promise to tell the truth.
Great. Well, I'm sorry. I got a call. I have to leave. No, I'm sorry. No, it's a good question. I think SoftBank played a crucial role in the development of the ecosystem in Latin America. I mean, we in a sense, we may be here today in part because of SoftBank, coming to the region and helping with the Latin American Fund to put the region and accelerate putting the region on the map of tech, on the global map of tech. Because when we started in 2005, and we would go to Silicon Valley, we would travel. The region was completely ignored. It didn't exist for the global investors. And gradually, step by step, I think things were happening. There was this first generation of companies in the early 2010s, and things were happening step by step. But it was only at the moment that SoftBank really announced the Latin American Fund, which was, and I'm sure Shu can tell you about much more, but the $5 billion fund. That was something that, people had to say, no, I'm dreaming, what's happening here? And it called attention to the region in a way that generated a kind of FOMO for other global investors that everybody wanted to come and see what was happening. And so it triggered, it accelerated something very special for the region. Actually, we were in touch with SoftBank a year before, or 2 years before, because one of the first, or maybe the first investment by SoftBank in the region was 99, a company in our portfolio. So they invested in 2017, before the fund. And maybe, I don't even know, but probably helped the interest of SoftBank in the region, but it was successful case, an exit to Didi was the first exited unicorn, $1 billion exit. And that was so we started working with SoftBank there, and then with the fund. If I'm not wrong, we have close to 20 companies or 20 co-investments with SoftBank in our portfolio. So we have a lot of experience working with Shu, when he was there, and the other partners. And what I can say really is that our experience was always very positive working with SoftBank. Um, I have to say, just to say, we're here. I know that your question was probably, more in that direction. I I think that when SoftBank invested in all these companies, at least in our portfolio companies, it was usually very competitive deals. There were other investors interested, and I think that probably kept terms more under control.
high?
Yeah. No, nice. I mean, nice, good terms, friendly
Okay.
terms.
Healthy.
Okay.
Healthy terms for the company, because our fear at the time was that SoftBank has so much power and so much money. If they go there and they're the only investor, how are they going to use that in terms of terms? But at that window of the investments of SoftBank, there was, the Tiger was here, and D1 and Co2, and all these investors were competing for the best companies. And so I think that, in my reading, I may be totally wrong, helped keep terms healthy for the companies. And so, but the partnerships have always been very positive.
Yeah, nothing to add. So,
All positive, yeah.
yeah. It was a huge experiment. I mean, people don't understand how much of a gamble it was to go to Masa in Tokyo, managing $100 billion, and say, Masa, this region, and founders from all over the world come to Tokyo to see this guy. Everywhere. He's a big conference room, a big poster of a samurai on the end, I'm not joking. And he sits there, and founders just come all the time. Before COVID, it was in person. You name it, they show up. Larry Ellison, and then Jack Ma, and then someone from Indonesia with a startup. Never someone from LATAM. It didn't happen in 5 years. And my partner now, who was my boss then, his name is Marcelo Claure, he's Bolivian. He had the office next to Masa in Tokyo. And he says, Masa, what the fuck? Basically. And Masa, I don't know, there are no good founders in LATAM. And Marcelo refused to accept that because he's Latino. And so he called me and he said, let's go see. And we went and we saw, and we were blown away at the quality of the founders. That's it. We said, these founders sound like the other founders. So what's going on? And we thought then, and we continue to think now, it's just a dislocation in the market. And by the way, when I go to, now I spend a lot of my time fundraising also, so I understand what it's like. Eric's been doing it for 10 years. And when I sit with the biggest pools of capital in Abu Dhabi, when you tell them Latin America, they think of drug cartels, currency depreciation, and maybe if they're in a good mood, football. That's it. That's how they start the conversation. People just have this very stale vision of the region. And so we convinced Masa to allocate $5 billion, which was 5% of the Vision Fund, less than the pro rata share, to Latin America. And in LATAM, that was a big deal, but it still did not equalize Latin America capital to the rest of the world as a percent of GDP. It was far from it. It was a lot of money for one fund, but not a lot of money for LATAM. LATAM venture capital in 2018, $3 billion a year. 2019, when we launched the fund, 4.5. 2020, 4.5. That's not insane. 2021, 17. That was the craziness, is 2021. You could say SoftBank played a role in that ramp up, but 2021 was just a crazy year. All over the world, not just in LATAM. That 17 went back down to 7 in 2022, and sub 4 in 2023. So back to 2018, right? Ooh, just disappeared.
You launched in 2018?
We launched in 2019.
19.
18 was 3, 4.5, 16, 7, less than 4. We'll see where this year ends up. I think it'll be better than last year. So it's a complicated answer also because it takes 10 years in this business to know anything. Truly. People laugh at Masa in 2017 when he's talking about AI. Suddenly people think he's right now. You overpaid for ARM, 30 billion in 2016. Now it's worth 120. So in this business, it's very easy to be laughed at. And you just have to ignore it and do what you're doing because you're investing in the future, and the future is something nobody knows. So we try to ignore the noise, try to pay a good price that we think is reasonable for a given company, and then the rest will take care of itself. I think SoftBank's first fund in Latin America, that $5 billion that Eric mentioned, will be an excellent fund 10 years from now.
Great. Thank you. And going on that side, you know that you guys convinced Massa to invest in Latin America. In here right now, we have some family offices from United States. What can you guys say to them about why invest in the region and not just stay
Can I start?
in the U.S.? You know, because
So I have a problem here, and actually it does not apply to you.
okay,
And I'm from Africa, and I have the same problem with Africa. All these people say, please invest in Africa. And the family offices in Africa send all their money to the US and they buy apartments in New York and they want to invest in Sequoia. That's a problem. And it's the same dynamic in LATAM. We have some family offices on our LP roster, very grateful for them, from Brazil, from Argentina, from Mexico, from Central America. The vast majority of Latin America family offices say, no, we're not going to invest in the future of LATAM. We want to take our money and invest in the future of the US and buy real estate in Miami. Tell that story and then go tell an American family office, hey, bring your money to LATAM. It doesn't work. So the problem starts here, from a family office point of view. With institutional allocators, it's different because they're thinking about macro trends and all of this stuff. But the family office dynamic is the wrong way around. And until that attitude changes, you'll have trouble convincing some foreigner to come invest where you don't want to invest.
great. I love that. Eric, what do you have to say about it?
No, I think it's a great point. I agree. I think it's hard to. I mean, we can't generalize. I think there's a general movement. But just to tell you a bit about our pattern of fundraising, we actually started with a very small fund, with a $12 million fund back in 2005, and it was proprietary capital. And we stayed 5 years with those $12 million. And then Brazil took off, and then we raised other funds, and every fund we actually increased the size, 25, then 50, then 100, then 150. Today our fund 10 is 370. But in order to get to where we are, after that initial fund, we travel a lot, and we try to really sell the idea of Latin America to investors in especially in the US. And there was a window of time in the early 2010s that Brazil was really hot. Brazil was growing, the economy was growing. There was the financial crisis, so investors were looking at other regions. Brazil was the last of the BRICS that people were looking, and we were fortunate to get that window to attract the institutionals to invest in us. And then between 2010 and 2018, we only had international capital, mostly from the US, but also from Asia, and a little bit from Europe. And no Brazil, because of the reason that Shu mentioned. I mean, in Brazil, people were very skeptical. We had a couple of family offices from our relationships that invested in the beginning of monashees, but then nobody really wanted to talk about venture capital. And so we lived there until 2018. In 2018, especially after we got liquidity with 99, I mean, then the local investors started to say, hey, well, maybe there's something there. And then the interest rates going down, people got more, more interested. And we strategically decided to open, instead of focusing only on international capital, we thought it was important and healthy for us to have local capital. So today, in the last funds, we have around 30% of capital from the region. So it's 70% international, 30% local. But it's very important to say these local investors, mostly from Brazil, but also from other countries in Latin America, have to say that they're still learning about the asset class. No, of course, there are the very sophisticated ones that already invest in venture capital globally. They understand the asset class, but there's a good number of local investors that are learning about the asset class, and unfortunately invested it during the peak of the hype, and they are now learning, what's the cycle and what's going to happen. So it's an education process. It's not going to happen like this. We'll need a few cycles, not a few 10-year cycles is too much, but we need a few cycles of investments and for the local investors to learn.
And I'd add that in our case, all of our LATAM LPs, it's being led by the kids. I say kids.
Exactly.
I don't mean
You're
they're
right.
not kids, right? But they're grown-ups.
The new generations.
But they're the next generation, not the ones who made the money with the offline retailer. It's the children who believe in the digital future of the region, and they're convincing their dads, usually dads, to invest in the region. That's how it's happening, and that's going to keep happening, right?
Thanks. So this conversation has been amazing. I don't want to end it without talking, about something that Alan and Ben, I think we're making fun, but it's AI. We really haven't covered that today, but it's all over the place. What do you guys think is gonna happen with that? Some people think very positive about it. Others are scared to death. Others say that this will finish a lot of SaaS companies because it's gonna be so easy to just do them. Any thoughts on that, and any advice you give the founders and how to pitch about it? Because right now everyone says I have AI, but whatever.
You want to start?
Yeah. So you're right. There's no room at any conference anywhere in the world where people are not talking about AI. I don't think there has been a consensus topic like this ever since personally I've been in tech, which was 2010. Crypto was not this consensus. Maybe mobile was close. Maybe internet. But it's that kind of conversation. Internet will change everything. Mobile will change everything. AI will change everything. So it's everywhere. And it's applicable to every type of company. The reason I like emerging markets is because they're so under-addressed. The reason emerging markets have struggled is because there's generally not the depth of talent that you have in developed markets. Where I get excited is AI changes that equation. Because suddenly you do not need 100 10x engineers, as they call them, to build something. You just need one. And the other 99 are in his pocket or her pocket. Or you can have 1 and 50 OK engineers who all behave like 10x engineers because they're using Copilot. And so suddenly it's so much easier than ever before to build anything. That to me is an incredible opportunity for markets where talent is not as deep. So for me, that's the one big takeaway for AI that I get the most excited about.
Yeah, in terms of the future with AI, well, you have to remember, in venture capital, we are optimists. Pessimistic VCs don't last that long. We're entrepreneurs.
That's real estate.
Yeah. But it's so I'm very optimistic about AI. I think it will improve our lives. Of course, there are some risks, but we will learn. There's one. I know it's kind of it's a simple analogy, but one analogy I saw the other day that I like is, painting was very realistic in the 19th century or whatever until they invented the photography. And when photography was invented, people thought, well, it's the end of painting. There's no painting anymore because painters really tried to be as realistic as possible. And then nobody could really, see that it liberated the creativity to create a lot of different, schools of thought in painting and impressionism, cubism, and everything. So I think it's a good analogy to what will happen. AI will be like photography for it. We'll solve some of the things that we're trying to do, and it will liberate our creativity to other things. So I'm very optimistic. In terms of AI, the AI opportunity in the region. I mentioned before that we are focused more on this global LATAM strategy. So there's not a lot of AI innovation in the region. There are some teams trying to do it. There are some Latin American teams actually trying to do some fairly sophisticated entrepreneurs in AI, but they are traveling and starting companies from Argentina, but also actually from Brazil, from Chile. Well, you see, Runway ML, it's a Chilean team. So there are some great teams that are traveling and they want to be close to where things are happening in Silicon Valley. But I think Latin America will play a role. But most of the innovation probably at this time will happen outside of Latin America. And a way of participating in the innovation is investing outside of LATAM. So we have been investing. So we invested in a company, for example, called Moises. It's a team of Brazilians it's called now Music AI. So it's AI for music. They are actually at the forefront of AI for music. They're based in Salt Lake City, of all places. And we invested in them. We just invested in a Dutch company called Data Snipper, which is using AI to actually kind of just make the workflow of auditing services much more productive. And so LATAM is an important region for them. So we're trying to participate in the innovation there. But we're quickly seeing, AI, especially applied AI, in many, many business plans, and you have to be careful because now everybody's, is defining, their business as AI for something. But the true AI opportunities are starting now to pop up. And we have to be very open because, as you know, I mean, we're good linear thinkers and usually lousy exponential thinkers, and this is going to happen exponentially. So we have to be open to be surprised in a short period of time with some very, very interesting new ideas.
Thanks a lot. So, any final comments to wrap up the night? Anything you want to say, or?
Yeah, I'll build on the whole AI theme. So I'm sure everyone's heard of NVIDIA. If you haven't,
yeah.
There's a place to jump off. I don't know what the market cap is now, but one of the four most valuable companies in the world. Now, the CEO is this guy, Jensen Huang, who for decades has just been slowly, every day, building. And he gave a talk the other day where he said the thing he wishes for the most for people is pain and suffering. Because without pain and suffering, you don't get character. And without character, you don't get special things. And that stuck with me a lot because we imagined that life should be about avoiding pain and suffering. He wished people found some pain and suffering. So the thing about LATAM founders is you are very familiar with pain and suffering. Deeply, it's your friend. It's your pet, it's your blanket at night because you've had to deal with the markets you're in. And that training just makes you better founders, more resilient humans, people with more purpose. And I realized that that's a superpower and should give you a lot of hope that you can survive whatever's coming and build some pretty special things.
That's great.
Woo!
Well, what can I say after this? This is. I will. Maybe I can say something based on our own experience at monashees when we started in 2005, and of course it's related to several things that we mentioned here. But when we started in 2005, my co-founder Fabio and I, we were both very passionate about entrepreneurship and technology and venture capital, and we said nobody's looking at the opportunity. There was nothing actually happening. It was this kind of nuclear winter of tech in the region. And we decided to start monashees and do a kind of a Silicon Valley style venture firm. And all of our best kind of friends, most intelligent and successful and brightest, they really said, I mean, you guys are crazy. I mean, you don't do it. I mean, it's impossible. It's never going to happen because of this and this and this. And they have other reasons why it would never happen in the region. And they were good reasons, actually. But we trusted our instincts. We trusted our intuition. And that's what I wanted to say here. I mean, and we were, of course, in a way, our entrepreneur hat of entrepreneurs of venture capital, but we had to trust our instincts. And I wanted to say that, I mean, you as entrepreneurs, whatever you do, trust your instincts, trust your intuition. Intuition is really a kind of background processing that is hard to explain, but it processes a lot of information that you're not even aware of. But when you have that instinct and intuition that this is going to happen, just follow that. Don't try to really just try to explain or see all the reasons and do a kind of a decision matrix. So go after it, and it will happen. It may take time. It may take a long time, but it will happen. So trust. And one thing we always say too, as Latin Americans, is if we can do in Latin America, can be entrepreneurs and venture capitalists in Latin America, we can do it anywhere. So
nice.
Very
true. It's been such a great honor to talk with you guys. This comes to an end for the summit. I just wanna thank everyone for being here. You know, this was a startup of its own, doing a summit, and we're always thinking of how to do it better next time. But after today, I don't know if we're gonna achieve that. It's been so great, so good speakers, so good panels, such great energy that maybe it's just gonna be one time.
Ayahuasca.
Nice. In the beach next time. So really, it's been an honor. Thanks everyone
Thank
for
you.
being here. Right now, we're gonna have some music. DJ, this hasn't finished already, but I just feel so happy. Thanks to all the team, Caricaco, all the sponsors. You're amazing, and hope to see you guys next year.